Hello and welcome to Chris & Co, the show looking at what affects business in Kent. With me, Chris Price. Joining me this week are Clive Stevens, chairman of Kent accountancy firm Creston Reeves, and Alan Reid, a partner at Aylesford Accountants McLean Reid. Over the next 30 minutes, we'll be talking about the impact of bringing tougher regulations on companies like Uber and Deliveroo in the gig economy, which affects hundreds of workers in the county. We'll also look at a Kent manufacturing success story and ask why new figures appear to show we're facing a slowdown in consumer borrowing. First though, we're looking at the government's announcement today. It will ban the sale of new conventional petrol and diesel cars by 2040. The move comes as ministers fight to improve air quality, but campaigners in the industry say it will cost consumers and the economy trillions. Louisa Britton reports.
The sale of new diesel and petrol cars will be banned from 2040. This means all new vehicles will need to be fully electric. The government's decision was announced today in an effort to tackle air pollution. It comes after a report by the Royal College of Physicians estimated that air pollution causes 40,000 deaths a year. But at the moment, less than 1% of new cars sold in Britain run solely on electric power. This BMW is one of the electric cars currently on the market. Now it's completely battery operated, so it's this type of car that the government would like us to be driving by 2040. Now although it doesn't produce any pollution like petrol and diesel cars, it is still rather pricey, with this model starting at around £36,000. Other fears concerning electric cars are the worries the infrastructure hasn't yet been implemented to support them. For instance, there aren't necessarily enough charging points to let drivers travel long distance. The decision has been met with criticism. The Green Party have said it doesn't go far enough to tackle environmental issues, while others believe it will mean drivers are out of pocket as their cars and vans lose value.
Fairfield UK wants to see electric cars. It makes sense. We want cleaner cars. We're not anti-electric, but we need a strategic plan to get there that's fair, so it doesn't devalue one of the most expensive assets that anyone can own, and also, more to the point, to be effective. And we can be effective now. We don't have to wait till 2040. Air pollution has changed since obviously there's more cars on the road. But in the same time, our life expectancy has increased. We're living longer, and there's more cars on the road. So it's inevitable something's going to come out with exhausting impact on people. Those people with asthma or respiratory problems are more susceptible. But the evidence that is being put out by the well-funded Client Earth campaign, who I regularly are on interviews with, they are putting out that there's 40,000 deaths due to air pollution, when there's only 11% of the NOx in London is attributable to cars. So why should those cars pay for the 89% of the issue? Yes, we need to clean up our air, but as I've said repeatedly, there are alternative solutions that work.
But with more than 20 years to go until this policy could be implemented, it seems we're a long way from reaching the government's target of every car being zero emission by 2050. Louisa Britton, KMTV.
Okay, so Clive, is banning petrol and diesel cars the right way to go about improving air quality?
Well, I guess it's one thing that we can do. The report says it's going to happen from 2040. Seems a long way off. And I think to make it work, the infrastructure that we're going to have to put in is just tremendous. So I'm sure there is an increased cost for people that we've got to get over. But generally, the trend must be to go greener in all walks of life. It's not just cars; it's everything. CFCs.
Absolutely.
So I think the trend will remain there, and we will hopefully technology will catch up to make it happen.
Are businesses concerned about an announcement like this? Is this a worry for firms who might have a vested interest in, or might have a lot of petrol and diesel vehicles?
Well, possibly it's an opportunity for British industry. I mean, the government's giving this prize for efficient battery development, obviously, and if we can get steal a march perhaps in some other countries, it could actually be very good for our industry. To the taxi driver who's found he has to lay out a lot of money on a new vehicle, that's another matter. But long term could be good. Short term, it's going to hurt.
Sure. And the Fairfuel UK, whose founder Howard Cox is from Cranbrook, he said that this will hit low-income families worse, presumably because there's such an outlay. I mean, do you agree with that suggestion?
I think that must be right, because any change like this is going to hit the poor elements in in our community. I'm sure that's right.
Is there anything that can be done then to try and ease that transition?
Scrappage.
Right.
Remember scrappage? Maybe we'll see it again.
And you think that, because the government have not been quite clear about what they're going to do, you think that there will be pressure to introduce some kind of scrappage, some kind of incentive scheme as we get closer to the...
Well, it's possible. They say 2040 is a long way off, isn't it? So technology will move on as well in that period. I think the infrastructure needed today to recharge cars, for example, electric cars, is probably going to improve. I hope that infrastructure improves and just makes it cheaper and easier. So what have we got? 23 years to do that. And actually, I think Alan's right. We're quite a creative country, and I think some of our creative industries, certainly in these technologies, can really make a difference.
Brilliant. Okay, chaps, thanks very much for your thoughts on that. Moving on now, is household borrowing slowing down? The latest high street banking data from UK Finance shows that consumer credit growth was 1.9% in June, compared with 2.1% in the previous month. Gross mortgage borrowing totalled £13 billion last month, with net mortgage borrowing 2.6% higher than a year ago. We asked people in Chatham whether they still use their high street banks.
I'm prepared to go to banks. I go to two banks, Barclays and Halifax Building Society, and they are really both of really good and good staff and very compromising.
The numbers will get less, I think, but it's down to the market. If the banks can't justify it to themselves, then they will continue to reduce the number. But I think I still want their name up in the high street.
Always a little bit worried about the security side of it, but my son, who's sort of into IT, always says it's really safe and secure. But that's the way I do it now, basically all online now. I never thought I'd say that, because I'm a real people person and I love to go into the banks, but I do think it's a declining service.
I think it probably, in one way it'll be easier, but in the other, if the computers go down, you've got no one to sort it out. So I suppose it could have its pros and cons.
Okay, so some people still using their high street banks there, but the figures today from UK Finance, which only covers, looking at high street banking finance, which only covers 45% of the overall credit market, does this indicate, the slowdown in borrowing, does this indicate that we're finally starting to see a slowdown in the big spending, which has actually kept the economy going since the shock of the Brexit vote last year?
Well, one of the things I believe is that the short-term debt is not that short-term. It's stretching into 10 and 15 years. So a lot of this borrowing is not immediately going to reverse itself. The main thing is whether people keep borrowing is another matter. But when you make money artificially cheap, you're going to encourage people to borrow.
Should we be even more worried that growth, even though consumer credit is slowing down, that the amount that what people owe for the most basic expense, their mortgage, appears to be high? I mean, that did show that was at 2.6%. I mean, is that more of a concern that actually the biggest outlay, the size of the debt there, appears to be on the up?
I think growing personal debt in numbers, regardless of percentages, is going to be a burden on people. And I think we've had a period of time since 2008 where disposable incomes have been stagnant, really, for a lot of people. And it might not be wise over the next few years just to try and bridge the gap by borrowing. I think as you said at the beginning of the show, there's no danger in interest rates going up immediately, but I would think that as we go through the Brexit negotiations, that must be a possibility.
Sure. Businesses also appear to be borrowing less. Increasing deposits deposits are increasing at an annual rate of 6.1% according to the figures today. I mean, are firms preparing for a rainy day at the moment?
Well, balance sheets are strong, I think, generally. I think business in Kent is doing okay. I think they are putting off investment decisions. There is uncertainty because of Brexit. And I think that's why companies are keeping cash reserves. And I think, the other thing, in terms of borrowing, banks have been very good with businesses, I think, since the recession. They haven't forced people into receivership, which may be a feature of previous recessions. And as we come out of it, I think they have supported and not withdrawn facilities. So I think for businesses, they've behaved very well as a generality. And I think, but businesses are sitting on a lot of cash waiting to invest.
And these figures today indicate that consumer borrowing is slightly slowing down. Well, is that a surprise? Is the indications to yourselves that actually people are still spending big on, are still creating more debt for themselves?
I don't think people are reacting very much at all. There may be some marginal slowing down, but going back to business banking, one of the other issues I think we ought to consider is the challenger banks. There's a lot of new banks coming in there, and that, of course, is helping the big traditional banks to be a little bit more, shall we say, business friendly, and I think that certainly is helping. Whether that will continue remains to be seen.
Sure. The high street banks are friendly lenders at the minute. Very briefly.
I think they are, but they're not. Strangely, in the risk business, they don't take risks.
No.
And therefore they need security.
And something that.
And that's the thing. And I think the slowdown might mask other changes, like the Bank of Mum and Dad.
Okay. All right. We're after the break. We look at a manufacturing success story in Kent, and we take a look at the gig economy. We'll be right back. Welcome back to Chris & Co, the show looking at what affects business in Kent, where I'm joined by Clive Stevens from Creston Reeves and Alan Reid of McLean Reid. Now we're looking at a potential radical overhaul of workers' rights in the burgeoning gig economy. A major report on working practices, the Taylor Report, has recommended that workers for firms such as Uber and Deliveroo should be classified as dependent contractors. This means these employers could be asked to pay things like national insurance contributions for people working for them, something they don't do at the moment. But critics have warned more regulation in the gig economy will push up costs and reduce flexibility for workers. We asked people in Chatham whether there's ever justification for not paying workers the minimum wage.
No, I think it's more important to pay your workers minimum wage. Everyone does put work in at the end of the day. Everyone needs to be rewarded, and that's very essential. So save money for the company, but it really goes to the people that are sitting on their backs. So give it out to the people that are actually working hard for your company and reward them.
I think a minimum wage is far more important than the costs of the companies and their overhead. It's about people. Living wage ideally would be great for everyone, but if not, a minimum wage works quite well.
Making sure workers are paid the minimum wage. It's illegal to not, so I don't understand why you wouldn't just pay your workers for what they're doing. It's just standard, really, isn't it? And if you can't afford to run a business and pay someone minimum wage, then why did you start it in the first place? Personally, in my opinion.
Okay, so Clive, are workers' rights abused in the gig economy at the moment?
Well, it can be by some. I think the Taylor review that has just come out is a good review. I think it strikes a good balance between warning and trying to do something about exploitation, which I'd be in favour with balancing that with regulation. In fact, I don't think it will over-regulate the economy. It is actually about good corporate governance. That's what they're trying to bring in. And I commend that, actually. So I think we need to make sure that workers aren't exploited. And I think where decisions on employment are tax driven, we need a level playing field across the various types of employment, so that people doing the same job pay the same tax and have the same rights, in my opinion.
Do you think that people trust companies in this sector fairly or unfairly?
Well, I think a lot of people don't realise that the waitress that has just served them is allowed to be sent home if things go a bit slow because she's on a 0 hours contract and things like that, which to me is just bad employer practice. But I mean, the main thing I think here, and what we have to be careful with this report, is that the FSB said we're worried that self-employment, genuine self-employment, may be damaged by this correcting of this exploitation. So there's a delicate line to be drawn, and with the Inland Revenue always attacking self-employment whenever they can, I think we need to be a little bit careful that we keep that in balance.
Isn't it typical that companies come out and say that this will put up costs, hamper flexibility? They'll come up with that line. Does that not deflect from the issue that workers are in many cases being
well, I think again the report warns about what they call the cost wedge for dealing with that, whether it is apprenticeship levies, national insurance, which is different depending on status. There could well be a cost, but actually I think a level playing field will increase costs for some. It will reduce costs for others. So I think it's important there's a level playing field for companies in a competitive economy.
Sure.
I think if you ask their customers whether they wanted these people to be exploited that way, I think the customers would pay a little bit more for their deliveries. I don't think people want to do that, and I don't think the bosses should.
We have a statement actually from Deliveroo, which works with more than 100 restaurants in Kent, of which 75% are independent. More than 200 people are riders for the company around Canterbury, Sevenoaks and Tunbridge Wells. In a statement on the Taylor Review, a spokesman said the report rightly highlights both the benefits and popularity of flexible work in the on-demand economy. However, he placed the blame of the disputes on outdated employment laws and warns the government to make sure that any new measures are pro-growth so that companies can continue to expand, create well-paid opportunities for people in the UK. He added the government should be under no illusions that any moves to restrict flexibility could undermine the very thing that attracts people to work in this sector, and goes on. Clive, are they right to say that this is an issue with employment law?
Oh, I think it is an issue with employment law. Employment law is different as party company with tax law as well. Everything needs to be coordinated, and again, stress the level playing field. I think the nature of work is changing, so flexibility and flexible working is something that in our business we encourage as well, whether it's different working hours or whatever suits people's lifestyles.
Do we foresee any situation where the government might actually come down quite hard on companies in the gig economy? Do you think that they might be minded to take a flexible approach with firms?
They certainly aren't on national minimum wage, and quite rightly. So, there are enforcement agencies, contractors, gang leaders, associations, and so on, that do monitor it, and I think that is needed. And so I think there are areas where, if people saw abuse, they would quite rightly want that dealt with.
Sure. Okay, gents, thanks very much for your thoughts on that. Our last piece today looks at people in the armed forces who often struggle to find work once their services come to an end. A manufacturing company in Kent, which almost exclusively employs ex-military personnel, is celebrating after securing a multi-million-pound contract to make signs for Network Rail. Harry Peat went to visit Britain's bravest manufacturing company, run by the Royal British Legion Industries.
This may look like any other workshop, but the workers here are all ex-servicemen. The Royal Legion has employed them to not only give them a job after active service, but to also provide a way for the soldiers to deal with the mental challenge they face outside of the armed forces.
I was on the Sir Galahad when he got hit in the Falklands. We got torpedoed and then we got bombed by the Exocet. I got shrapnel in both legs, and basically that was it. I had no self-esteem. I was in a bad way when I left the forces, and if it wasn't for the Royal British Legion Industries that got me out of the mess, I wouldn't be here today. And I've been here 18 years.
Network Rail has recently announced that Britain's bravest will be their sole supplier of signs across the train lines. British Legion will get £5 million from the deal, but the reward for the workers is bigger than money.
I'm proud of what we do, and I think our customers are happy with the product we give them. Self-worth, all that. So, you're doing a good job. I mean, that is your reward. I mean, knowing you're doing a good job.
The hope is that the multi-million pound contract will give more job opportunities for ex-servicemen.
We will create more jobs over the course of the next 18 months. Some of the chaps that work for us call what they do for us their second life. Having served in service and paid a real sacrifice in terms of what they've done in service, they then see what they do for us as a second life. And I think there's a great spirit here, a really good feel, a good team spirit. And we've got guys from conflicts of nearly 40 years ago and guys who come out of conflict only a few years ago, and they work together and look up to each other. The more younger guys that you would have seen look up to some of the older guys that have been here and have been in the army, because they very much do see that as a team of guys back together.
So next time you're out in the car or you're walking down the street, just think that these signs could have been made here in Aylesford at the Royal British Legion Industries by ex-servicemen. Harry Peat for KMTV in Aylesford.
Okay, Alan, this story is important because a survey from Barclays actually indicated that the economy could lose £1.5 billion over the next 5 years from companies not actually using the skills of people from the with military backgrounds. Do you think that companies aren't really looking for, aren't giving the right opportunities to former military personnel?
Well, it seems to me that those people have skill sets, and usually the military spends a lot of time and effort outplacing them, but it is a huge shock for them getting into commercial systems, and that's always been the issue. But I think studies have showed that if you have assembly lines with military type personnel, they work extremely effectively. So I think anyone that's not looking that way is missing a trick.
Absolutely. Gents, thanks very much for your thoughts on that. Before we go, we just have time to reveal our number of the week. And this week's number is 0.3%, which we can see here on the screen behind me. That is the rate of GDP, the rate that it grew in the second quarter of the year. A minimal improvement on the 0.2% growth in the first quarter. It's the slowest quarterly growth of any nation in either the European Union or the G7. Gents, was that a surprise to hear that economy is growing slowly?
I think what's interesting is what the regional variation would be, because my sense, certainly from our client base, that Kent has been growing a little stronger than that. I'd like to hope that's the case if we get underneath it, but that'd be my sense. And I suspect there's a regional variation which you sort of have to get under.
Briefly, Alan, do you think that Kent is in a better position than the rest of the UK?
I have the same impression, but I think we should debunk the fact that that's GDP. But if we have twice as many people producing twice as much goods, then the per capita, how well each of us is individually, is not improving. So let's not get fixated just on GDP. Let's look at GDP and the number of people producing it.
And
productivity.
Very quickly, does this put an end to any discussion of interest rates going up in August? Yes or no?
In the short term, yes.
Short term, yes.
Short term, yes. Okay, that's it for the latest edition of Chris & Co, our show looking at what affects business in Kent. You can keep up to date with all the county's latest business news at kentbusiness.co.uk. But that's it. Thanks very much.